Hi all, it's 20 September 2021. I'm touching on Chinese Equities Market daily review today. Do we run or take cover? Before I proceed, appreciate greatly if you can give a thumbs up, a like for this video, and do subscribe to my channel so that more people will be aware of this video and this channel. Hang Seng Tech Index, what's the point today? Today it closed at 6,271 and it's down a couple of percentage point. Not a big surprise because Hong Kong markets did terribly today, and audience who have watched my video for a long while will see that I have a few price points: 6,600, 6,300, and 6,100. And so far today, the volume is relatively thin with turnover of 23.43 billion, which is very low compared to previous days. One part is that China is having its public holiday, and it's also giving the Chinese bear a big chance to short sell the market. The range today for Hang Seng Tech Index is 6,156 to 6,379. You'll realize that 6,100 is not being touched at even at one point in time. This gives me some level of comfort that, well, at least the market is holding on well. This is a longer duration chart of Hang Seng Tech Index. Is it 6,100 for the support or is it 5,400? Different price point will mean different kind of playbook. And what I'm looking for really is this 1 to 2 weeks for the Hang Seng Tech Index to hold at least 6,100. Well, for Hang Seng Index, it wasn't doing fantastic. It opened sharply down, gap down, and it's like 200-300 points down. And at one point in time, it hit 23,871 points, which is slightly above my support level of 23,700. Because if you do recall, I mentioned that once it breached 25,000, and since it's been a few times, hitting 23,700 becomes a possibility. There's a possibility of down leg. So the question now to ask ourselves is, can it hold at 23,700, or will it move another leg down to 22,500? I do look for any positive catalyst going forward in the coming week to see whether is there a strong catalyst to bring it above 24,700, 25,000. The good news is volume is low today, so it's indicative of any signal or direction. Is the bear taking the opportunity to short sell the market when the Chinese officials, regulators are having their public holiday? There's a possibility. Hang Seng Index for the longer duration chart, you will see that 50, 100, 200 moving average price point have been broken significantly. US 10-year bond yield at 1.3% and China 10-year bond yield at 2.9%, holding steadily. Even China 10-year bond yield, you've been realizing that I've been talking about Evergrande bond default risk, which the market have been mentioning. But China 10-year bond yield is holding on relatively stably. So is that really a concern? Well, this is again another duration chart that I mentioned. Okay, nowhere is safe. Properties, EV, tech, pharmaceutical, every sector are down. You will see that companies like ZTE, ZA Online, Leading below 100, and Auto Home, Huixian REITs, everything is down. Well, even down futures at this point in time is at 34,000, down 1.4%. And people are saying that, well, commodity prices are falling because of potential risk in the Chinese economy. China market are having a public holiday, so no movement. Point two, China defended its actions with Wall Street executive last week, close to the end of the week, and citing that recent actions are meant to relieve social pressures. Are Wall Street bankers believing their words? Today price action, of course, is a big mix in that perspective, so not kind of like getting some comfort on that. when it opens for the market on Wednesday for Chinese markets like Shanghai and Shenzhen, do watch out for the support level 3,500 and 14,000 points. The systematic risk from Evergrande that I touched on earlier had to be watched, but seriously, do you think China will allow Evergrande to default? And there's so much risk, remembering that Lehman Brothers crisis way back in 2008 when it bankrupt, and there's a financial crisis in the US that led to S&P, Dow Jones, and Nasdaq breaking all-time low in March 2009. That's a very painful lesson. If you're telling me that China does not take precedent and learn from that lesson, even though they are not being exposed to that level of significance, no. To me, they monitor the market even more closely compared to you and I. So with Hang Seng at this level of 23,800 plus points, the irony is actually I'm finding more comfort in Hang Seng Tech index, because the Hang Seng index has come down and catch up to a certain extent of the fall that Hang Seng Tech has came down. So price level wise, everything is close to their support or may have broken their a strong level of support and coming down a couple of percentage point. But then with this price action, there might be value hunters coming in to buy the shares like Xiaomi, because for me today I bought Xiaomi at around 22 Hong Kong dollar. I also took a trading position in Tech at around 96 97 Hong Kong dollar, which for Tech this is a short term trading position which I will take a profit or loss in the next week, in this coming week. Alright, as always, this should not be construed as any investment or trading advice. This reflects my take of the current market situation, and I may continue to monitor market closely for you and I. Thank you.